you want an exposure to a market or an
Everything they need in one place.
Be the world's foremost authority on
Individuals, advisors and institutions.
Hello and welcome to the Morningstar series 3 Stock Tips. I'm Holly Cook and joining me today is Gervais Williams, manager of the Miton UK Smaller Companies Fund. Gervais, thanks for joining me. So we're talking here about 3 stock tips. Why don't we just jump in there? Give me your first interesting stock tip.
Yes, I mean, one which we've been excited by recently is a company called K3 Business Systems. It's a software business. It's involved in delivering software, which is particularly to do with logistics, in all sorts of areas, manufacturing and other areas, but the area which is exciting at the moment is retail, logistics for the retailers. It's an area where there's a real shortage of opportunity of product in this area. This company has actually just recently introduced some new software on the Microsoft AX Dynamics platform, and they can't keep up with demand. There's that much demand for their product. Great news for them, means they can get good price, they can roll out increased sales. It's a recovery stock, so it's come up from £1 already to about 220, which is where it is now. It's only a £62 million company, and we think the share price could still go considerably further from here.
So too much demand is a nice problem to have, but what would be the sort of associated risk that you would warn investors about in this case? Well,
one of the problems is, of course, they can struggle to get staff, and that is a feature for them to recruit staff with AX skills, and they've had some of their staff poached by other people. That's a negative. The company itself has about 10 million of debt. Clearly, it's not risk-free from that point of view. But overall, I mean, it's an unusual position when you're absolutely flat out. So hopefully, most of those risks are more than compensated by the revenue you get from your customers.
That's an interesting one. So let's hear about your second stock tip.
Yes, I mean, another recovery stock, probably not started recovering. This is right at the bottom at the moment. It's a company called CML Microsystems. Again, it's another sort of IT company, but it's particularly involved in chips, electronic chips it manufactures itself. It's one of the top 3 in the world in what it does. And these are memory chips. What they do is they manage memory chips on a memory board. And it's a really excellent company. It was making about 6.5 million last year until one of its distributors decided to stop distributing all products in their area. It's nothing to do with their product, but the whole area, which meant suddenly that sales dropped, its profit forecasts fell to about 2.5 million. Share prices come from about halved, roughly, from the top to the bottom. It's now on its recovery. We're beginning to see that some of those customers are using a different distributor. There's improving demand coming through, and we think, therefore, the share price is ready to recover, hopefully back to where it was previously. Hopefully it could double from here.
And so that problem with the distributor there, would that be kind of one of the key risks in your mind associated with this company?
Yes, I mean, the key issue is it's got to make sure that its products are commercial to its end customers, and it's a question whether its customers use its particular chips or someone else's, the 3 others in the world. So from that point of view, it could lose out market share as a result of this in the very short term. But what I do like is actually the quality of its products mean that its customers, in fact, are choosing to use other distributors, coming back to its product, and that is why we think sales and profits will recover in the next 2 years.
And so your third stock, is that also going to be a tech stock?
No, I suggest perhaps something with a lot of assets. The markets are uncertain. It's nice to have some tangible assets under the bonnet, and that's a company called Conygar. Now, Conygar is a business which is involved in property development, property investment. It's standing at below asset value in spite of doing 5 very good years of developing new marinas offshore on the coast of Wales. Now, this might not think an obvious area for people to have yachts, but there's plenty of marinas on the Irish coast, almost none on the Welsh coast. And so they think there's plenty of opportunity there, plenty of housing development coming through, particularly with the nuclear power station being put on Holyhead. The Holyhead development they've got is very, very well timed, and we think there's substantial upside on that as well. So net, you're getting into a business which is actually standing at a discount to tangible assets, good, strong balance sheet, with lots of exciting news hopefully to come through in the next 24 months.
Well, it sounds like this business is quite diversified amongst sort of various types of property, but ultimately, is it tied to property prices, the success of the company?
I think the housing market is useful for them because they've got a lot of housing land which is coming on stream, so that will help, and the Help to Buy has actually helped quite a lot. We've seen London housing market peak out a bit. I think in the regions it's not been quite so buoyant, but I think the fact that they've got this housing land, which is bringing inward investment into some of these communities, is going to be very positive, and the local politicians are very much in favour.
Well, Gervais, thanks very much for giving us your 3 stock tips.
Thank you.
For Morningstar, I'm Holly Cook. Thanks for watching.